Well, have property prices reached their peak? I'm speaking with News Corp real estate editor Tim McIntyre. And Tim, we're thinking mainly about Sydney and Melbourne prices now because they've been so high. Have we actually reached as high as they can go?
Well, no, Nicole, we haven't. And we've been hearing reports about markets hitting the roof for over a year now. There's a lot of people want to hear about the market settling down. But the fact of the matter is what we have in place with the low interest rates, population growth, especially in Sydney and Melbourne, and plenty of underlying demand, not enough property supply. This is what's keeping upwards pressure on the property market and will continue to do so until interest rates start to go back up again.
So what's sparking all of this extra speculation? Is it a price index or clearance rates?
Well, clearance rates have been coming down and people are seeing more new listings on the market, particularly in Sydney. They take this as an example of there being a lot like more buyers out there to choose for, more properties for different buyers to choose from. Which is less pressure, but the fact of the matter is auctions only make up about a 15-20% of the actual market, so there's still plenty of others out there and it's going really quick. Well,
let's look at the clearance rates. In particular, Sydney seems to have come off the boil a little. What can we draw from that?
Well, Sydney absolutely has come off the boil a little, but it's still in the 70%. And if you look at historically or at any other capital compared, it's still actually a really high number. Now, when we first hit 80% a couple of years ago, we were thinking, wow, like back-to-back weeks of 80%, that's unheard of. But now that's become the norm. So people are starting to think, well, gee, are we in trouble here? But the fact of the matter is a lot of the other capitals are struggling to make 50%.
And is there something we can learn from the difference between the capital cities?
Well, the difference is capital cities, it's the same as any suburb or any regional town. Like there's so many different property markets in Australia. Places like Perth and Darwin are coming off the end of the mining boom where their property markets actually shot up quite a lot and now they're correcting. Whereas Sydney was the next one to go and it is in its expansion stage. It's coming towards the end of that now.
What if it comes towards the end of that, if it does hit this peak, what does it actually mean? Are we going to see drastic changes in the market?
Okay, well, not drastic at all because at the moment there's still enough demand so that if prices plateau, as they will at some point, we're not going to see the 30% or 40% crash that you can see in a mining town or something like that. I mean, there's too much population, too much of a strong economy in New South Wales to hold prices up. You'll see the market come off just a little bit, maybe a few percent drop like it does at the end of every property cycle, and then it'll level out and go on to the next one.
The ABS figures that came out said it was something like 21.5% growth over the year in Sydney prices. It seems extraordinary.
Yeah, well, it is, and all up since 2013 at the beginning when we did meet our last correction. There has been more than 40% growth in the 3 years, but that's not going to fall away to nothing, but we can expect it to plateau and it'll probably go 6 or 7 years before it starts growing again.
The difference between the cities, I know we touched on this before, they've actually gone, like Perth and Darwin have actually gone backward.
Yeah.
Is there something we should be taking into consideration there?
Well, Perth and Darwin are two very different markets to Sydney, especially Darwin where you only get about 30 property sales a week up there and it's a transient population, so there's not a lot of demand for people wanting to buy properties up there. There's a lot of investors and a lot of the other people want to rent. And some of the mining projects which have wound up and finished have meant a bit less employment, a few like relocating companies and therefore less demand on the market. So it is actually coming down from probably prices that were a little bit too high in the first place. So it's correcting down now. That won't last forever. Perth as well really had a growth spurt, some time ago now while the mining situation was in full boom, and they've been coming down since. They're heading towards the trough as we speak.
I guess a lot of this intense scrutiny is about people trying to pick the market, trying to look for any clue or indication that something may change. And where do you think we are in the market cycle?
Yeah, well, look, Sydney's it's getting towards midnight. It is on the property clock, as they say, it's very close to the peak. It just it is settling down. It is sort of branching out a little bit. But if you're looking for a time to sell, now is the best time to do it. Best time it has been in a long time in Sydney. If you're looking for a time to buy, not so good. So you want to go to one of those markets like Perth or a regional area where it's actually towards the bottom, heading towards the bottom. The best time to buy. If you ask Warren Buffett, you buy at the bottom and sell at the top, and a lot of people don't do that. But the other market as well is Southeast Queensland, which is expected to grow a good 10% over the next year or two.
All right, if you can't up sticks and move cities, The other options are what, renting?
Yeah, look, a lot of people are actually selling at the moment to make the most of these conditions and renting for a couple of years, because you can rent a property in Sydney for a lot less than you can buy it and pay off mortgages at the moment. And they just want to wait till the market settles down. There's not as much competition and they can actually buy back in at close to the property's value rather than what the market's paying now, which is like 5 or 10% overvalue on a lot of homes.
Nationally, the house price to income ratio is the highest it's ever been. Is that significant?
Well, it's significant, but it's most significant here in Sydney because Sydney is dragging the national average up, just like everything. Whenever you hear about the national property market, it's basically Sydney and Melbourne, and then everyone else is below the average. So what we're seeing here in Sydney is, interestingly, if you look at the average income in pretty much most Sydney suburbs, it's not enough to service a mortgage on a median price house in any of those suburbs. The thing is, we've all got a lot of equity backing us up at the moment because of the way the prices have gone up over time. People have made that much equity, they're able to continue to upgrade into nearby or like better properties in their own areas. But I mean, it is significant because you want to be able to pay that off. But banks are very tight with their lending at the moment, so it's only going to get tighter, hopefully. So we are safeguarding against that sort of thing.
Do you think this is good news for the first homeowners? We know it's pretty grim for them at the moment, particularly with everything so high. They are a bit priced out. They won't have the equity behind them to get into that first property. Is this good news for them, and could the tide be changing?
Well, things are turning a little bit for first home buyers, and the reason being that the recent crackdown on investment property lending is opening up a lot more opportunity in Sydney's more affordable areas. Places like the further out to the west and even up towards the Central Coast and down south towards Wollongong. These are markets which recently, up until recently, have been a battleground between investors and first home buyers because it's entry level, it's a good price point to get in, there's a bit of rental return opportunity there. But now that investors are sort of packing up and moving elsewhere and also being told that they can't just keep buying one property after another, you know, that affordable entry level will open up more for first home buyers who have hopefully been spending all this time saving their money still rather than despairing.